Hi guys, welcome to another episode of Earnings Season with me, Randy, at RT Rowe, and
this is Danhai at H Danhai. Finally,
you changing it?
Yeah, change the name. It's no longer Dan Nada.
Oh wow,
H Danhai.
the other Danhai. And this week we don't have any guests, so it's just Danhai and I talking, I guess randomly about the stuff that we think about the market. We're thinking that every now and then we might just do one episode where it's just us talking, because then I do have these conversations a lot. Yeah. And we'll see where it goes. If people like it, they like it. If they don't, they don't. And if we have to edit out a lot of it, we just have to edit out a lot of it. But yeah, it's a good conversation. I just asked Dana if he'd seen Purity, Consolidated Bakeries.
Unfortunately, I haven't. Skimmed through it. I think they're down on the quarter, right?
It's a year end.
Oh, yeah.
They're up. They're up on the quarter, down on the year end. Yeah.
Oh, yeah.
53 million in 53,000.
Oh, yeah, and that was it.
Yeah.
I looked at it, I was on $53,000. I was like, never mind. I lost versus $53,000 against a couple million shares. That's not enough to raise the EPS
it's so
significantly.
So. You're a hypocrite because they have 4.3 million in comprehensive income.
Oh, I'm not looking at the report. Randy is.
Yeah, versus 1 million last year.
Yeah, but where's the comprehensive income coming from?
You sound like you know what you're talking about. There we go. Yeah.
Yeah.
Not all comprehensive income matters.
Exactly.
Yeah,
and that's the issue. I find that because most of them said not all, because that's a thought in the market.
You always unrealized gain on investments. Yeah, that's actually good. I actually need to go see what it is.
So what kind of investments are they?
I don't know. Yeah, maybe they wouldn't classify property as that.
Unless it's
your Purity owns. All right, one thing at a time. Let me see where it came from.
That's actually cool.
Yeah, no, that's actually cool. It's a comprehensive because it's a big jump. Mm-hmm. It's comprehensive income for the quarter is 4.3 million. And versus 1 million last year, and for the year is 16.9 versus 19.9, so still down.
Well, sometimes when the year is down, it doesn't matter.
If the quarter is good.
If you're going back on a rise, then I like this when companies are down. Not to say I like when companies do badly. When I'm looking for opportunity in the market, I like to say when something happened in a quarter before or 2 quarters, something that happened within the last year, to say, to bring the EPS down, and if that thing is reversible, then I know I just bought a bargain. I'm buying into the future. I'm buying the reverse of the profit line.
That's true. I just realized we went straight into this. Hi guys, welcome to earnings season again. Where is, as you heard Randy and I, we talk about, I guess, what we want. I did intro the episode, but I feel like maybe, I don't know, I just felt we just went straight in.
Yeah, the numbers are in front of us.
Yeah,
you know that.
Yeah. I hadn't seen them either.
Usually have to wait for the audited or reasonable speculation. You don't get too fancy with it, but you give yourself, what happened, you know what can happen, so you give yourself room for that being able to happen. You try to explore opportunities, which one makes the most sense, and then you try to make some investment decision based on that.
On cash
and that's
flow.
why I'm a teacher.
On the cash flow, they have 23.5 million in fixed assets purchased in a quarter.
Oh.
And 600 financial investments is, I hate how the cash flow do that. So the purchase of the fixed asset obviously negative 23 million.
Yeah.
And then the financial investments is 641,000, positive 641,000 versus negative 1.7 million the year before. And at the year end, it was 887.
Yeah. Whoa.
So I know they own something though. I think they own. I don't want to say Barita. I know they own something. Like they're as surprising as them own it.
Mm-hmm.
I don't mean like them pension. I don't mean like them.
Oh.
Right, let me check.
Hey, why is the dashboard so long? Like, why do you have so much stocks, bro?
Yeah, multiple portfolios. What is? I look at all them as well.
Oh, okay. Cool.
Yeah. Then it's broken up later on. Some things you just can't get out of.
I thought you were going to tell me you're secretly diversifying.
Oh no, I am diversifying. It's heavy diversification. I'm down on a lot of the new buys too.
Oh. Yeah, Jam Tea scraped me. I just spoke about Jam Tea.
You down on
But-
Jamty? You down on it?
Oh yeah, no, I'm not down on it. Okay, I'm down on my last week not my purchase, but my last week figure from Jamty. So it went up, it went back, it came back down,
I know.
and that really hurt. It hurt me because you got some gains from it, unrealized gain, of course, but it came back down after selling in the market. I see where a director has been selling some shares.
Yeah, they do have a lot of reports every day. Almost every day now.
Yeah,
Almost every day that a director has sold and bought sometimes and
Yeah, I
then
don't know.
sold. Yeah.
So the price is being pushed down. But it's weird to me, And you see something in the future, you're like, oh, cool. Jamty doing this, bringing QWI on board. So we're preparing. No management going to buy into a company like that specifically and think, hey,
Let me
we're
reduce.
going to badly.
Yeah,
Like,
let me reduce my holding.
And we saw a couple times now where a couple reports now, 2 or 3, where Jamty is doing better just on QWI's input.
Yeah, heavily on QWI's
Heavily.
input. Yeah, heavily.
So,
in fact, I think that they're trying to QWI essentially replace the supermarket.
Yeah, I said it on Twitter the other day. I was having a conversation. I mentioned Jamty and Ryan asked what I thought about it. Yeah, but what I said was they replaced the low margin business with a high margin business because any unrealized gain on investment, it doesn't have any margin. There's no operation off that, so it goes straight to the bottom line. If you make 100 million from revenue from supermarket,
there's a whole heap of splitting up. That might come down to 1 or 2% sometimes.
Yeah, so
yeah,
1 million profit.
Yeah, and a whole heap of maintenance costs with it, people
everything
costs.
that's in
Yeah,
there. Yep. Was investment company is you realize unrealized gain of your stock goes up $100 million, then that report has revenue and it goes straight to the bottom line.
yeah.
I know my analysts out there, they love to see that change in QWI in Jamty because they can say, oh yeah, the margin got so much bigger.
Yeah. So in other words, the return on the return on equity technically, the return on not technically, but the return on equity for that side the business is much better. Yeah, and there's a low overheads. I love that, but they haven't actually caught up fully. I remember seeing that myself. Let me actually bring up the numbers of Jamty. I feel like I was saying something else and then we got off track.
Oh yeah, it was what's down. So it's not down for the year. It's not down for my holding. I got such a nice high on it last week.
And
it's
it's
fall back like that.
Yeah, it spiked last week at $7.64.
So I'm watching. I'm seeing the rise. I expected the rise because
Last week being August 6th.
something good going on in the
7th,
company.
2019.
Yeah, freeing up. So money start coming to them in a better way, more efficient way.
Yeah.
And then
Nothing.
reverse, basically not reverse, but almost reverse.
Almost reverse.
My profit on that one stock.
When you look on the, really? Oh, as in you almost back straight flat?
No. I bought at 3 something.
Okay.
So
And it's currently at 5.44.
Yeah.
It could go, but don't be surprised if it didn't go right back down to $3 something. Yeah. If that happens, I'm buying more.
I'm buying. So I'm even tempted to buy at 5 something in the queue right now because my expectation next report at least. So if the liquidity stops coming in on the sell side, then it maybe go back up. But
When did the quarter end?
the quarter ended June. So I got a report just now. Yeah,
So end of September is another one.
another good report
And,
and it's moving, but
But
it might move before then because the selling pressure might disappear.
Yeah, selling pressure, what that mean?
There's somebody on the sell side pushing shares in. So if there's not, John Jackson was right about it. He says
Who?
John Jackson.
Okay, yeah. Well, he does, which is why I asked you to explain it because I know I hope people read that and them just tune out immediately.
Yeah. So the he looks on the queue, and if the queue on the sell side is small, then it's significantly higher than the opening price, then anybody buying into the company will have to buy not a premium sort of, or at least be pushing the price up.
In other words, anybody coming in is going to pay a little bit more, which is what causes the price to move up. Yeah.
So if there's pressure on the sales side, then there's a lot of sales coming in. And that generally pushes the price down because I put my trade in the queue, and I see Randy puts a trade in there, and the price is smaller than my price. to beat him and get my shares sold, I'll put a smaller price on Randy.
And
so
then,
we fight our way to the bottom, and the price drops.
Yeah, I think the kids are why for that. But what happened in that situation is that all right, well, here's a real life example of that situation. I think I saw it happen a little bit with SSF this week also, where SSF I saw it happen with the Wigton for a little bit also. And there's one other stock. I don't want to say that stock yet, but yeah, I saw it happen with SSF. And I think also Cygnus is a third one. I think I also saw it with Cygnus, where you see a lot of people like Cygnus. Let me see, because I had bought a little. Yeah, like 27, then went on to 26 and on to 25, and I can tell it's because there are people there are people selling at 27, 26 who bought at 13.72, which was the IPO price. So, boom, 27.44. There are a lot of 27 sales. So there are a lot of people who I remember them people them coming at IPO, them get burned, and they get burned over what, 2 years? No, not just that. Over 2 years, I have to watch everybody and them cousins who do an IPO. Talk about them double and them triple and them still. I mean, I bought some Cygnus at $9 at one point. So there are people, them people get really
upset. It's not worth enough.
Yeah. So no, for these people, I'm sure you buy at 13 and you get a chance to sell it at 27.
And it's not good. Every day is around the same price. So when I'm looking, I was making my money on it, plus some. And then I said, boy, now I'm going to further because the queue not really move up. You start thinking about exiting because you make your profit now.
So I get a whole heap of DMs about that. A whole heap all the time. And the Cygnus, the US.
Oh, yeah.
Yeah, it's not moving like how the other JMD is moving. Do you think I should? I don't know if you should move it or not. I can't tell you that. But I
Our friend, she responded to my comment on Twitter, and I mentioned Cygnus USD on Twitter, and another friend, she responded to me and she'd be holding both USD and JMD from IPO. And I told her she should be happy with the JMD movement, but the USD, like, it don't want to move. It's the same stock, the same rights on the profit of the company, same rights on all the assets of the company. So it's actually, when you hear about value versus the price, the value of that stock is the same as the Cygnus JMD.
Yeah, if you guys read any of my articles where I talk about the pari passu or pari passu, I always screw that word up, that term up, but like anything that is one stock has to be every other stock.
Yeah.
So those two are literally the same. They just have two different names. So in essence, the value of one of those is the same as the value of every other one of those.
The other one is trading higher. So if we're looking at a value standpoint, say you want to buy the whole company, then you're getting a discount on one side.
Yeah. Who will on that side being the US side, but who does that transfer?
Who transfer?
Yeah. If I buy the US, who can I transfer? We mentioned this the week when we had David on. Shout out to JC Knight.
JC Knight.
JC Knight 2 on Twitter. Yeah, for that nice interview. We got a lot of feedback on that. But he mentioned this also. I mentioned it. So who will buy the US versus the Jamaican and give you back Jamaican instead?
Alright, so if you want to get, say, the USD stock, so this SCI USD, if you sell it as SCI JA, you can quote it in Jamaican dollars. So when you're selling, so you buy it for 13 cents US, you buy the USD. If you go on the market and want to sell that USD stock, you go on, you sell SCI JA and you sell it in Jamaican dollars. So you can get a conversion rate on it, even better conversion than the bank can give it to some more.
That's actually a fire thing, but also that again, because I hope some people just heard that and realize what's possible from that. But yeah.
I was thinking about that.
That's a set exchange rate.
Yeah.
Anyway, I'm done talking. Okay, but that's SCI JA versus SCI JMD.
Yep, SCI JMD. If you want to sell your SCI JMD in US dollars, you sell SCI US.
But you can't do that.
You can. It's the same.
I can take my SCI JMD and sell it as SCI
US, not USD, US.
I can buy SCI US and sell it as
SCI USD and sell it as SCI JA. SCI JMD and sell it as SCI US.
Why do they have two?
I don't know why I have to be honest. I never saw the point of separating it like that.
Yeah.
But
No, seriously, why? Why do they have SCIJA versus SCIJMD?
no, they have JMD, you know. SCI JMD
Yes.
sells.
Oh, yeah, that's the active stock. That's what we talk when we say signals.
Mm-hmm.
Yeah. But it's also the very same stock that is SCIJA
It's the same
in terms of value.
value, yes. But in terms of selling it, you can't have SCI USD stock and sell it as SCI JMD stock.
Why not?
That's what's the mechanism there is right now.
But
To
who
be
says
honest,
that?
I'm not
Because if
sure.
it's the same, it's the same.
It's the same stock. So my thought was that they'll just, if you sell it as this, you can sell it as that. You can trade money over, right?
No, not even your thought.
It makes sense. Like.
No, but they are the same. The whole paripisu thing.
Mm-hmm.
So they have to be the same.
Yeah,
So why can't I sell it?
it's not trading. So you can own it. It's
Yeah,
not
but why can't
trading.
I choose to sell?
Trust me, bro. I don't have a good answer for that. I don't know. I think it's dumb and can be worked out better than that.
It'd be good if we had like some market experts we could reference
Yeah.
in Jamaica. Anyway, maybe we'll edit that part out. All right, leave it in. Let's go. Back to Jam Tea. Let me not even touch that. Back to Jam Tea.
Yeah.
So they have they have replaced the supermarket income with their QWI income,
Yep.
and the QWI income has a much better margin. You had mentioned that. And so that during the third quarter ended June 2019, and I'm looking on the Jamaica Stock Exchange website. If anybody wondering, listening, who managed to not know, I'm looking on the Jamaica Stock Exchange's website, which is jamstockx.com. That's JAMSTOCK.e. There's no dot, sorry. Jamstockex for the x.com. And that's where you can find all your market information on every listed company in Jamaica. It's a nice enough website. It's not as clean as everymickle.com, which is my website, which is a free plug that I'm pushing for myself. But it's a nice enough website. And it has all the information on all the listed companies. You can see who the top 10 shareholders are. You can see how each company has performed each quarter. You can see from the directors, the senior managers, you hear how many shares they have, because they have to tell you. You can find the prospectuses there. Once there's any announcements on IPOs, that's the place you go. If you care about stocks in Jamaica, jamstockx.com is somewhere you have to go. JAMSTOCKEX.com. Slow that part down. Anyway, so Jam Tea, which is Jamaica Teas, just dropped their third quarter results. It's funny how I do that. So we're looking at the financials, and we open it, and the first thing you see the cover page, and then the second thing is the board of directors commentary. I just literally just scroll past that. Like, I'm not interested in hearing what you have to say. Like, I read that last. Yeah, cause
You know I go first, bro.
it's just I don't want. First of all, it's your job, right? So I don't want to trust everything you say. I want to see the results first, and then I want to hear your story. Cause if you don't know me, I have this thing I say: companies lie, CEOs lie, but the numbers can't. And that's a joke, because legally a listed company cannot lie to you, but they can say,
They can choose what they want to say, so they can choose what not to tell you. Sometimes.
yeah,
But at the end of the day,
they have to tell the
can't go wrong.
technical truth. They have to tell the
Yeah.
technical truth, but they can give you the technical truth in such a way. What they're very good at doing is saying something that sounds like what you want to think they're saying. So, like, a good example is JMB says that when the Align Vest deal is finished, they will own not less than 20%. Who the hell says things like that? You know, somebody talking to them say, "Yo, how much money you have?" Not less than three. Yeah, but how much? Yeah, not less than $3,000. So you have $3,000, not less than $3,000. So you have more than $3,000,
Not less than.
which is also not less than $3,000. It's how companies be, because they can't lie, and they have to tell you that they're taking a certain stake. And they can't, but they don't want to tell you how much of a stake, just in case you do any projections. So,
Which is weird. It's like they don't want me. It's like they don't want me to see where they fall behind their projections.
but it is weird. Yeah.
So if they told me, then I'd be holding them to that line.
Yeah.
If not,
then there's nothing to hold them to.
Yeah.
Not less than. I would have not less than 20% profit increase.
oh, okay. So.
which I mean, what they're going to have what? Anybody work that number yet? I work. I'm not sharing that, but when I hear everybody talking about whenever they get to the Align vesting, they say, "Yeah, but it's kind of complicated how the whole thing go." It's not that complicated.
It really isn't.
It's very straightforward.
Yeah,
it's pretty straightforward. It's
new subject where, which is subject where
Old
Oh,
Tech.
what's up?
So it just call it Sagicor. Boom.
Yeah.
Sagicor Group. And
JMB owns 20% of Sagicor.
not less than.
Not less than. So
Not
20%
less than
or more
20%, yeah.
of their profit. So
I think they did that because of that. You're an associate company if you're 20%.
Okay,
And then
that's awesome.
yeah. That literally is associate company at 20% and majority shareholder once you pass 50 or 50.1.
Yeah, you become a subsidiary.
So and if they don't want to say, they can't legally say that for 50.1. So they're just trying to box themselves in that we're definitely going to be over an associate company, but we don't want to say how much we're going to hold.
And if they have just 20%, they don't go over the 50. What I expect them to do, record share profit in associate within the P&L. So they can
Really?
just take a piece of the bottom line from Sagicor. That's what Sagicor is doing with X-Fund right now.
You mean with Playa?
With Playa, sorry, yes. So they report that in the P&L. Panjam is famous for doing the same thing with his associate companies.
Well, Panjam is set up that way, right?
Exactly.
Yeah, but hold on.
I think investment houses start defining themselves in that way, so in a certain way that they can do that. Sagicor is doing it. Why JMB wouldn't do it?
Well, you know how
'Cause I
those
know-
guys, you know how inventive those guys are. Once somebody does it, they follow.
Yeah, and you know, and you know the fact that Sagicor is in the same market. It's good to say, hey, I have a piece of my own market share.
What I find funny is the holdings of that. The holdings of that must be very funny. In fact,
Sagicor?
No, not just even Sagicor. No, because Sagicor, how much of JMB does Sagicor own?
Oh yes, I had that number this other day.
Yeah, let me bring it up. It's a funny thing though, because they already own a certain percentage. So on that basis, JMB by the books, by the shout out to the textbooks. on that basis, JMB should be worth a lot more because they're doing a share buyback. Yeah, I wonder how many people have worked that out for NCB already. Guardian is one of the biggest owners at NCB. So essentially, NCB just did a huge share buyback.
Closing the loop, I call it in my head.
Yeah. But those shares don't get counted as shares I no longer own, or like it's not considered that they're off the market. They're still issued shares.
What's the name? JB, Jamaica Brothers. They did something similar to that with the Jamaica Brothers Trust, I think its name is.
The shareholder
So it's
trust,
a separate entity that I control and I own shares in myself.
And
I record a profit from
owning shares
in myself. So anytime I increase, then
those shares increase. Yeah, I think the term they used was that the shareholders will benefit from the increase in share price. And that's very bilious business.
The way I see it, it's a self-fulfilling prophecy. If my share goes up, then the shares I own go up, and my piece of my profit line goes up.
Which then has an effect next quarter when I have to report it.
I keep growing. I keep showing a profit line consistent.
You can blow an entire company up with that. Yeah, you can grow your share price from single digits to 90.
It's really interesting how that works.
Yeah.
It's like, so it's a real share buyback on the owner's end. Say I own JBG, and they do that, and they're reaping value from their own shares by holding it in a separate entity. Then amount of outstanding shares are
actually limited without being actually limited.
Exactly.
Yeah.
And I'm actually getting value from them not being out there on the market.
Yeah, exactly.
Because
it's a fake buyback. All the benefits of a buyback. Yeah. But you don't officially have to call it that. I'm surprised that we're allowed to that in Jamaica.
It was interesting to me, to be honest. But
yeah, surprised that FSC
the way it's defined is that I think it's fine legally.
Okay, I mean, I have no doubt that it's legal, and if it's legal, then I'm good with it.
Good, yeah.
Yeah, if we really wanted it to be legal, we would make it illegal. All right, let me try and connect some dots. I'm sure somebody's listening and they're like, yeah, but they started with what did we start with? We started a specific company that I didn't actually. I said, what did they own?
Purity. Purity. We spoke about Purity a bit, and then we're here.
Purity owns. I can't remember what it's. JSC also lists the stocks like I guess maybe their system uses a weird alphabetical system. So like the lab is under the T's because it starts with THE. The lab. Yeah.
Oh yeah.
Because the Limners and Barretts, right?
Well, they don't do because it's not thing there. It's THE, so it start the name.
Yeah,
of
but
the
they don't do that for everything that starts with that.
Everything has the on it.
But even what else has a T on it?
The incorporated name for the lab is it the?
I
'Cause that
don't
might be
want
the
to
issue.
say yes.
That might be why they do
You
it
can
like
you
that.
can always
Check the prospectus.
yeah. So people in the prospectus, it tells you exactly in the prospectus that it has to tell you is what the legal entity that you're buying into is, like what the actual name is, and that is under the section called. Let me not get this wrong. About the company, where they have to tell you what they do. Yo, hold on, watch me take the whole out. And it should be about the company, but there's a part where they legally say it. There we go. On about the company, 7.2, the history. The company was incorporated, and this I'm reading from the lab prospectus, guys. Section 7, page 20. It says page 20. And in the PDF, it's also page 20. Yeah. It was incorporated on March 30, 2009 as The Production Lab Limited. And on April 22nd, 2014, it's changed its name to The Limnas and Bars Limited. So the is in there.
Actually changed. Okay.
Yeah. Currently referred to by its acronym, The Lab.
The lab.
Yeah. A funny story behind that name, too. The guy that came up with that name is on Twitter. But I don't think that's my story to tell. That's a cool name. I like cool names like that.
Oh, yeah, I actually thought it was very Randy.
Yeah, but it's not me.
Bars.
No,
I was like, hey, Randy Rowe.
Yeah, it's a cool guy, but it's not me. I can't take credit for that one. Yeah. But it's a virgin of mine. On and off virgin. I'm sure I be listening to this right now and saying unprintable things. But going back to Jam Tea, which I can't remember. When I remember who Consolidated Bakers, which is Purity, owns, then I'll tell you guys. Until then, we'll just keep talking about Jam Tea. So Jam Tea,
what I also found interesting in the report was the rental income. The rental
from
income
what?
line that's growing, I think it's 25 million, somewhere in there. The search rental. But yeah,
I
it's
don't
in
want
there
to
and
search
it's growing.
rental yet. I'm wondering if do they still own the supermarket property?
Oh. They might just own it because I know how they did it. They bought the name again. They sold it into another company that they own.
I don't know if they own it or it's
own
an
a piece-
associated
yeah.
company because one of the owners
Owners,
in the
yeah.
company owns it. Yeah,
Yeah,
Bay
something
City Foods or something like that.
Yeah, man. I think they own a piece of it too. Bay City Foods. Yeah.
I think the director owns a piece of it. So which is why it's called an associated company. There's something funny in that, you know. 'Cause it's associated even if you and I have a company and I own another company, that company is associated by virtue of the fact that I own it. Even if it doesn't do any business with you.
Yeah. I know that.
So it occurs with that.
I was remember a report that calls it a joint venture. So I'm wondering if
Yeah, there was a time when they spoke about a joint venture, but you notice every time they move something over to Bay City, you lose it here, and it doesn't come in under OCI either.
Oh. Might have a small interest in it, not even significant. Like,
I think it's an associated company. Remember, you have more than one way you can become associated. One of the ways is 25%, 20%, not less than,
not less.
not less than 20% ownership. But another way you can become associated
It's
is
significant control.
yeah,
But it's still account
not significant control, director.
Oh, I know what you mean. I thought I was on that same line as you before, and then you mentioned something else. After was the associated company, like accounting wise. But associated company legally is just hey, I have some association with.
Yeah, but then you have to report things associated. Yo, shout out to whoever is listening to this now and they're frustrated because they're like, guys, why don't you just check the pay? Because the financials tell you. I get the financials tell you everything right here. The principal activities of the company and its subsidiaries. So you are correct. Bay City Food is listed here. Bay City Foods Limited since February 1, 2019. That's this year. That's that kind of close. Cause we and I spoke about this last year.
Yeah. So
they changed something. They changed their name or they incorporated something. Funny enough, that's right below QWI Investments Limited. You think they'll list Bay City?
If it does well enough. If
you don't have to do well. Honestly, it just have to be a growing concern. Almost anything lists these days.
Yeah, well, true. Well, that.
Yeah, but mark that point so we can edit that name out just in case it got picked up. But we'll run from the point. Yeah, do you think they'll list? I said, do you think they'll list? You said, maybe not. I said, okay. Do you think they'll list? Do you think they'll list?
Maybe not, because perception is a lot to some of these people in the industry. So if you list a company that's not necessarily doing so well, small profit line, how much you can really get out of it?
I get you. but we've seen companies are not doing too well this, and they get a lot out of it. But it's how your broker positions you.
Depends what your plan is for the future.
Yeah.
If
But-
you're trying to grow, sure. If you're coming to me with you've been doing this whole time and asking for my money, goodbye.
Yeah, well, that's for you, but some people do it. And I actually don't mind buying into that already. All right, watch me. If I have a supermarket, there are various reasons to this. I think what I'm liking now is that it's becoming less taboo. And it's becoming less taboo, not just the list, but to be open about the fact that I'm listing for the tax break. You know, there are people like, yo, this company only list for the tax break.
Should I be ashamed that?
Yeah, that's like saying, yo, I only took this job for the paycheck. Yes.
All right, when you go to your job, this is for people above a certain threshold. The income tax threshold. If you're above that threshold, ask yourself, would you do the same work right now, but you don't pay tax?
Yes.
You can be a couple dollars over the threshold and you're paying tax. So imagine how you feel $20,000 per month over the threshold.
Yeah. Yo, anything,
you're paying tax on everything now.
You make any money. If you make 100,
if you,
any money you make,
I'm losing the extra value I have over that threshold. So just ask yourself, would you do the same job, not pay tax?
What's tax these days? Employee tax.
Employee tax.
Yeah, when I say tax, I group everything in there. I group education tax, I group PAYE, I group even.
It's weird because it's on a threshold. So if you're above anything above the I call it 150, 1.5. Yeah. Anything above the 1.5.
Money up, the man that call 1.5 million 150.
No, you have to think it into being.
Yeah, I hear you. Go ahead, talk.
Yeah, you have to be above the 1.5. So if anything above the 1.5 is that's where you get taxed. I don't know the tax rate on that.
Yeah, no, I get you, but generally, I'm thinking it's just a ballpark figure. I know for companies it's 25%. I remember back.
You pay 143 if you add 1.5. So
no, just percentage wise. In my corporate days, I was doing about 30%, 32%.
Oh yeah, 20.
So your question really is, would you do your same job for 30% more in your pocket, right? There's nothing wrong with saying I'm listing for a tax break. That's a great thing to list for.
I'm giving you a piece of the company that's not worth more. Because we can clear more money to our bottom line.
Exactly. And
you bought a company with X amount of bottom line just because they were paying tax. And then you have it. The reality is that you're getting more money from a company that you just bought. The company is making more money. You own this piece of the company. It looks good to me.
It makes perfect sense.
Yeah.
And if you have the right plans and you build a company the right way, then you utilize all the space that a tax break and the market access to capital gives you. And then when the tax break ends, where your company is, it shouldn't have a great fall off. So I've been looking at a couple of companies. We're coming to the first 10-year mark for a few people. A couple of companies have come off. Last D's now a main market company and so on. And what I respect them for is that like the company hasn't really stumbled too much. Yeah. Because remember, looking on the bottom line, the net profit line, once they start paying taxes, they're about to take a 25% hit. Yeah. That and a couple of companies have done well. I think Creamy has.
Creamy is they're below the profit they were making last year, just off the tax break. But the growth they got from the tax break.
But they didn't take a 25% hit. They made it up. They made it up. Yeah, I don't want to get it wrong.
But it's so good. Like Creamy right before they listed it, and Creamy after the break.
Oh yeah, it's huge difference.
So just the money they get from the listing, and they utilizing the extra profit from the not paying taxes.
Yeah, it's let me.
It's just business. This is why you have a business, you make money, you want to keep as much of that money as possible, so you can expand the business. Which is the whole point of the junior market listing with the tax break.
They want the list for the tax break. Yes.
Yeah. You can do wonders with that.
You only trade stocks for profit. That sounds so silly unless you go on Twitter. It's something that people say
go
proudly.
Back to the sentiment. You're doing stocks for the sake of doing stocks. Like, brother, let's make some money with it too, no? At least try. I'm not knocking anybody for losses.
I'll knock people for losses.
You lose and you learn.
I'll knock people for losses if you have certain sense. I cuss a brethren of mine, and I'm listening now. I won't say his name. But I cuss a brethren of mine like he is an auditor, right? Which means he speaks the language of finance every day for his job. He knows it how you and I know English. Buy no stocks.
Yo, I find accountants not read that good on stocks.
You have to understand them, man. Sometimes these audits, you're an auditor, you have a certain level of responsibility where you can't be. So, all right, think about this. Suppose one of the companies that I am auditing buys and owns stock in a listed company or a listed company. There's all these things.
Can you find out those companies that you're not allowed to buy?
Yes, but
then there's no but. Just don't buy those. just buy the others.
No, you don't understand.
Excuse. And then,
yo, you hear about the new IPO that...
I said, no, bro, you have to understand as an auditor, you have a certain level of responsibility. Make up your mind. The thing is, there's no shame in going out there, using the skills that you have, investing against the skills that you have in whatever those skills are, and making money off it. Since when are you ashamed to make money? Since when are you ashamed to make money?
Legally.
Legally.
You're making money legally.
You can braff proudly. Like, mommy don't have to vex. All right, nobody, you don't have to look over your shoulder.
I've had people like come up and almost upset because I expressed that, hey, I'm here to make as much money as possible.
How dare you?
So you're like if I take your approach and invest for the sentiment of it, like I'm not here to make money. Why am I investing? What's the point of?
I'm trying to build a legacy. Then you don't understand.
So the legacy is built on your 0% savings.
It's not about the money. It's not about. You know been told that about stocks? Straight face. It's not about the money. Like what? Yeah. What is it about? Why are we doing this
here? Is this fun with us? Like I don't understand.
No, I'm trying to build something. Yes,
so and that thing
costs money.
Like.
But funny enough, those people, when they actually make some money, they're the first person to tell you.
Yeah,
once profit goes up, they're the first person to tell you. They're so proud.
So much conversation, so much arguments with boy.
God, it's like the shy ball is the prophet. Can I say that? I don't care. They're weird. They want the money, but they cuss and act away when you get it. And then the second they make it, they're happy.
Yeah, man. I made a tweet, dividend investors, how they act when they make some accidental profit.
Oh God!
And I put a GIF on it. GIF. Somebody gonna kill me for that. And it was a man hiding and eating.
Oh wow!
So man, dividend. Okay, wow. So they're all in your face. They tell you. You ask him, how much do you plan to make a return on the stock you're holding?
Not for the long term.
Not for long term. Eventually, become a dividend stock. They're just going to not having space to grow and you keep paying out money. Yeah. So I was like, so you want to make a return, just not necessarily capital gain. And yeah man. Not capital. One day I get him some nice dividends. I say, cool. The stock go up, brother. That was the bossiest I ever see that youth ever. Man, come back and him say, look how much gain I make on. And he flashing in front of people's face. You know?
Yo, shout out to that because he's tracking his gains. Big up that. He had a percentage. Yeah, big up that.
Big up I know you're hiding and eating on your gains, bro.
Yeah. Guys, like 90s dance all over again. Lord. The people who are there. Old people. But yeah, you're right. It's weird. It's weird how. I don't know if it's an offshoot of just society, how we are, because we came up as a society with almost being, the rich man on the hill is looked at as something bad.
What's wrong with him?
And then, like, how dare he work hard?
Oh, God.
And then, but at the same time, we also all wanted to get rich to have the house on the hill.
The house on the hill, because the ghetto, you's dream is the ghetto. But he'll tell you, boy, that rich man, that uptown people.
Yeah.
We can't tell you.
Yeah.
All right.
In prison.
Before his relocation.
Yeah. Oh God.
So yeah, man.
But yeah, you're right. And you know what? Let me tie the point up. Let me make some sense out of it. I think that what at the core of the issue is that people, when they invest in, need to be actually aware of what it is that they're going for, and be honest with themselves about what it is that they want out of the investments, and then actually align the investments to that.
Yeah,
it's just that simple. So if it's don't say you're a dividend investor because you put your money in separate when it wasn't flying. Right?
Yeah, exactly. And so you're afraid, boy, you never work how I thought it would work. So.
Yes, but they're paying out a dividend, so suddenly you're a dividend investor. But the second the stock flew, you see the cap gains. I mean,
and you just tell me, say you never care about them, though.
Yeah, suddenly they forget that they told you that gains aren't real until you cash them out, right?
Yeah, man.
They also said that we never make a loss.
Yes.
You don't realize a loss until you sell. Let me tell you something, brethren. I'm looking at that negative on my sheet and I'm feeling it. So I have to sell it.
Your net worth is real worth. So not because you're not seeing the money in hand, you still have less money. If anything got me have to sell that stock, guess what you're doing?
Yeah, that's a financial literacy point. People are like, yo, and it's linked back to IFRS 9. They're like, yo, it's not a real thing. I saw David did tweet something, he called it a dangerous rule. I'm like, there's nothing dangerous about it. Yeah, all it says is that if the stock that you own, you bought at $100 and it's not worth $50, you have to put a negative 50 on your books. That's all it's saying. That you can't pretend that the negative 50 isn't there.
So it's in comprehensive income. Like that's exactly what it was before now. So you were making your losses in a comprehensive income because you buy it.
You just weren't paying attention to them.
Yeah, exactly. And
officially,
a lot of people that know accounts, people that speak in
accounting
speak against profit.
Yeah,
I find that they ignore that. So the company making its losses on investments, investing your money because it's your company, investing your money and making a loss on it every year. And boy, saying go up 30% on profit, but you've got a comprehensive income line and the loss on investment is 200%. You just lost all the money really because the company is worth much less.
Yeah, but that don't sound as good, right?
Definitely not.
That don't sound as good, so I'm not going to acknowledge it. But no, IFRS 9 forces me to acknowledge it.
There's nothing dangerous about the rule. We kind of have to do more. Put more due diligence on our process.
No, you just, you know what it is? You come back to the same thing I say all the time because it works in the big companies, it works in the small companies. It's the same thing all the time. You just have to track it. You just have to track it. That's all it is. IFRS 9 is just the International Association of whatever boring crap. It's just those people saying you have to pay attention to it. You can't pretend it don't exist.
You can't pretend. And that's exactly it.
Yeah. No, they say, hold on. If you want to pretend it doesn't exist, that's perfectly fine. But you get to make the decision once. And once you've made that decision, you can't go back on it. Yeah. Which is why it's a big deal. Which is why I tie in a whole heap of things together. It's like the end of the Marvel universe. It's like I'm saying on the episode where we spoke about X Fund and Sagicor and how big it was that they turned their entire revenue model around. It's the same thing. That's why it's such a big deal because they had to go, okay, guys, we said when we bought this company that we were doing it for the income and we wanted it to run through the P&L, the profit and loss.
Because we record the gains, the stock going up.
Now when they felt a whole heap of the hits from it, they're like, yo, switch the revenue model around. And that's why I say it's such a big deal because for a company to literally change how they make money.
They're saying, that's exactly it. As far as they're concerned now, how intricate, how important that line item is to the business. It's turned around. So before it's just stock trading. You buy the stock at X and I sell it at X plus 10.
And you want to feel the IFRS 9 gains off because they wanted that. They wanted the rise in the stock price to benefit them. Yeah.
So now they're pivoted from the stock is important to the company is important because they're reporting the bottom line of that company. Yeah. So the company itself has to do well outside of the perception of the company, which is the stock price.
Yeah, I'll play devil's advocate and simplify and say that they kind of have to do that because at the end of the day, the company is more important than the company's holdings because the company has to.
Especially with how much they own.
Well, yeah, but if you think fiduciary duty, which is lawyer talk to say that if you're a director of a company, then you have a responsibility to always make the best decision for that company. What they did could be said to be the best decision for X Fund because they protect the future. They protect themselves from the fluctuations in the price. Yeah, they protect themselves from the fluctuations in the price. And I guess maybe they just think that something isn't acting along the lines of what we want to do. Then we have to change, which is perfectly fine. I rate that.
Fine. Yeah, I actually rate that.
Because when you talk to the employees of that company, sometimes they don't seem to know that it's okay to go, yo, I bought this because I expected this from it. It didn't work out. Let me see something. Let me show one example. Like, for example, I don't want to talk about that yet. Let me see if I still want. No, I can. I don't hold any. Salada. Unless you don't want to talk about Salada. Or you don't care.
I don't care.
Oh, yeah. So Salada. That almost happened to me. I actually tweeted earlier this year that it's the first time I made a loss because I chose to realize it. Because, a loss isn't real unless you realize it.
When he got the loss, he told me, and he said, I was going to be in this company for longer than I thought I was.
Yeah, but because it's a play. It's a play that it have safeties on it.
Take your loss.
Yeah, sometimes you hear it say play guys just mean like, NCB is going to go up. You have a specific reason why NCB is going to go up. And so the play is that you're buying the stock or you're buying something that you expect to react in a certain way based on something will happen. That's a play.
Yeah.
So the play was, I had bought, I can tell them the play was Salada was at the time undervalued and might still be undervalued. Let's say they closed that last week, as the week of August. I don't know, whatever week have August 15th in there is the week we're talking about, August 15, 2019. That week ended with Salada closing at $34.
And so they had a great year last year.
Yeah. Halfway through the year, they started having, I think, a really good year. Or no, they started the year really
Started
well.
the year, man. And then man, Q4 was great. It didn't post the Q4 numbers separately from the
full year
numbers.
Yeah.
When you check that difference, it was great.
Yeah.
So our expectation on stock was Q1
is going to continue to be pretty strong.
Yeah.
Even with the seasonality of their Q1. Yeah.
But something happened.
It wasn't a Q1 because they had a good Q1, they had a good Q2. So it was in the Q3.
Isn't it? They're not on the calendar year, no?
No, they're not on the calendar.
Yes, that's Q2.
Even if they are, whatever it was in their Q3, they had a fire at the factory. Yeah, man.
That was the start of this year, no?
I don't know. I don't know what they call it.
So
I know that a fire at the factory. I'll find the right quarter.
Yeah, fire at the factory. The boiler, I think it was.
Something blew up, and they didn't
up,
have anything going for. I want to say, it sounded to me from the report like it was like more than half of the quarter.
Oh yeah, man.
More than half of the quarter, they just did no work. They made no money.
But if you look at the revenue gain, the revenue compared to the quarter before, with that happening, that to me that was saying, I hear what they're doing really well because with that much days of operation, they did so well.
I think they equal. They didn't make a loss. Like they equal the previous year's quarter, even though they didn't do any work for half.
Man, they got a loss in the quarter, but the revenue was
close
to what it was.
Same period last year.
Man.
Yeah. Which to me is a good sign
of
something of the company itself, core operations running good.
And in the Q2, you see it. They gained. I can't remember how much they gained in the
recent
quarter.
File is
the report that was just released in the Q2. I'm saying Q2 because it's June, but I'm not sure if it's which quarter.
All right, so their quarter, June 30th, 2019 was their 9 month.
All right, yeah, man. So in Q2
September
they had
is their year end.
September is the year end.
Yeah.
September they had the okay, cool.
So but they had the fire in their Q1. You're correct. Because they had the fire in October. October last year. Yeah.
And if you look at the numbers now that this fire isn't there, that's great.
All right, let me tell you what the numbers look like.
You can see the momentum continued.
I was going to do one of those tangents that I'm sure some people like, some people hate. You notice also that you look at the asset. Do you look at the statement of financial position? I mean, I look at it sometimes.
I look at it. I look at it when I go in deep.
Yeah. I pay attention to it based on a company.
Yeah, based on a company. Like I want to, if there's something I'm looking for, then I'm looking in it.
Yeah. Or if something don't make sense, then I check. Obviously, I check everything. But going back to Salada. So this quarter, the 3 months, these 3 months, which the month 6 to 9, 6, 7, 8, 7, 8, 9, month 7, 8, 9, they had revenue of 275 million versus same period last year where they had revenue of 266 million. The cost of sales, however, 176 mil versus 164 is a percentage on that. 176, rough percentage, 0.1. No man, I want to see what the actual margin is. So 64%, they lose what, 36%. That's 30 gross profit margin, 36%. I did the hard way for some reason. I could have just put the gross profit over the revenue. I did the hardest way. Yeah. It's because I'm thinking about the next thing I was going to say. Yeah, what the margin of that and same period last year where they made gross profit of 101.5 mil against sales of 266.4 mil. And that's a 38. So it's about what is actually lessened. Yeah. It went down slightly. I'd call that flat. I'd call that flat on the gross profit. But when their other operating income is also lower. Yes, operating profit. This actually doesn't look very good. But when you get all the way down to the profit line, it looks a little better, right? Because how did I do that actually? Because they have 60.4 million in profit versus 56.6 million in profit last year. So the profit went up because they had more net finance income. That's US dollars, FX.
Yeah, I think so.
Yeah, it's the most boring way to make money unless you're a bank. Yeah, but it has saved a lot of companies over the years. Yeah. And burn.
Sterling.
Yeah. And burn. Burn and help. Yeah, it's such a crazy thing.
Over and over.
Side note, you notice people like they complain about the fluctuations in the US dollar in Jamaica all the time, right? And it annoys me because it still shows the lack of financial savvy of our I'm so sorry, guys. I'm so sorry. I know you can hate me. You're going to say I'm an asshole for saying this. I'm sorry. But of our entrepreneurial sector in Jamaica,
yes.
yeah, the lack of financial savvy there sometimes we show it. And it even affects the bank. Because I'm surprised that nobody immediately has jumped up with a financial product just to offer these businesses a hedge. If you spend...
JPS is asking for a hedge.
Exactly. I can understand something an entity the size of JPS asking for a hedge. Because JPS can move the rate.
Yeah,
but other companies...
My little brother, I distribute something for something.
And you consistently spend. You're in the bank shouting that you consistently spend 500,000 US. So you know that's a lot of whatever. Yeah, 500,000 US. Maybe that's your cost of goods or whatever. And you do that every month, and you don't understand how when the rate fly from 128 to 138, how it mash up your business. And I get it, bro. But if that happens to you every single month, and you do it every single month, talk to them about a hedge. If you don't know what a hedge is, talk to your business banker about it, and they need to know what it is. Remember that, right? Because it's okay if you don't know. It's your bank's job to know. So ask them, and if them can't tell you, a really good business banker is supposed to say, hold on 1 second, and take up the next phone and call down and find out and put something together. And if enough of you do that, the houses come with it.
Yeah, they come with a product.
You can't
always contract,
right? You can't always wait for. It's like NCB lead the market in banking, and Mayberry lead the market in equity. Yeah, it's like anything. If them don't do it, don't do.
You're not gonna do.
And then once them do it, everybody doing one. Nobody gave a damn about the filling out of the prospectus forms for how long. NCB go IPO? No, every single house. We have a product working on also. Yeah, right. Great. Not that I'm happy for it, but it's also annoying. I think it's fair for us to feel this annoyance with the financial houses in Jamaica and the lack of savvy that they're showing, and also the entrepreneurial class, the lack of savvy that they're showing. Yeah. If you have this problem every month, guys, every business is built on the solution of a problem. If you have a problem that you and all of your other entrepreneurial friends have, that's a business right there. Solve it one time. Just like how Rory Craig Walker on Twitter.
Yeah.
He has this company called Jamaica Care Packages. I think that I'll ask him to be on the podcast if he's up for it. So, Rory, if you know, send me a DM if I don't send you a DM already, and ask if you want to come on and talk about your company. But he has a problem. His company sends care packages to people overseas in diaspora, right?
Yeah.
And he had a problem, I think, because of obviously they have to use a lot of US dollars all the time. They have to buy stuff. So and accepting online payments, I think, was a painful thing for him. So I think he came up with an entirely new company because it's a pain point for people. So the company is to accept online payments in the US, and you get paid in Jamaica.
I think I saw it in the news.
Yeah. So
that's actually really good. Cool.
Yeah. Yeah.
Yeah. The more
I'm constraining what I can say about that, because I don't think it's a problem that we should have.
Oh, yeah, definitely.
And I am of the opinion that it's a manufactured problem. But then when I start explaining why it's a manufactured problem, I might step on toes that I can't afford to step on.
All right.
So
cool.
Yeah.
But I think the opportunity he has made, that's really good for Jamaica.
Because that's how you go. Once you have an issue, a problem, a recurring problem affecting enough people, then you have a business right there. Yeah. Everybody in this community is too far away from the town center. Every day we all stand up down here and we complain about it. That guy who went and bought a car or the bus and started to carry you guys from the town center to the community back and forth. You might hate him now, but he's a businessman. Yeah? He's solving a pain point, a problem. And now so many of them have started to become a problem that whoever can wipe them off the roads will become. But you get the point. The solution of a problem is the formation of a business. Quite definitely. Simple. And sometimes the best thing is when you find a problem that people don't know that they had.
Yep.
So anyway, Rory saw the problem of people not being able to accept the payments, and so he came up with a solution. And that's what I like. I like that he came up with a solution. I mean, if him can come and give the details about it.
Definitely.
But carrying it back to everybody else, carrying it back to the whole entrepreneurial sector in Jamaica, it's the same thing. There's no financial problem Jamaicans are going to have right now that are new. Somewhere in the world, somebody already had it and sorted it out.
Boy, I had that problem, you know.
Boom.
We fixed it 10 years before Jamaica.
Fluctuating currency, you know what this can do? Well, we know what it can do because we can go and check every other country in the world that has had it and just see what their solutions have been. We talk all the time about how
financial markets need to get better. Yeah, I hear that one a lot, you know.
Yeah.
About how
from people in the financial markets.
In the financial markets, I'm like, and you're on Twitter every day complaining about, oh boy, dollar gone up again, you know. You know, when you buy a US where they come see the dollar fly, I need the 125 now.
Right?
Hey bro, go to your boss and tell him, you know, say we need to start with the forward contract them because me and everybody else have this problem.
Literally. And just make some more money.
Yeah.
And then you know what's going to happen? Either NCBR Chris Berry is going to do it.
And get a bag of money.
And then everybody else is going to follow in 2 to 3 years.
So you know we know offer forward contracts.
Yeah. Yeah. Do you know what a forward contract is?
Yeah.
A forward contract is when we and then they
So
sell the frontline staff.
Go up? Oh, you don't think it go up that much? Or buy this.
And then they'll say people backlash again on Twitter because that's where you got to cuss about everything.
Definitely.
So the same people are going to say, look how the bank now push them forward contract and them say want to run up the dollar. It's so funny how it works. People complain for anything, but I'm saying that there's an opportunity there, and I'm surprised that nobody's taking it up yet. And I'll be thankful when I see the first
person do it.
Yeah, because it'll mean that it'll happen. It'll go well, and I hope. Well.
Even the small Cambio can take this up.
That is true.
You know those
because the Cambios do. They are currently doing a lot of
buying and selling on spreads.
Yeah, that's not what I was going to say, but I don't know if I'm allowed to say what I was going to say, so let me shut up.
Yo, you know what?
the Cambios are at the forefront of the financial sector locally in terms of monetary adherence to policy.
Imagine a small Cambio walk up and say, boy, here's a forward contract. Like, because we can trade US legally.
Yes, yeah. Then and they can also, they're financial institutions, so they can accept large amounts. I could be wrong, but I think they can accept more than $1 million.
Oh, they can. So they registered Cambios can accept more than $1 million.
Cash, yeah. Okay. That's a very powerful thing.
Depending on the size of the Cambio itself and the level of clearance they have, then they have a certain amount of dollars they can handle for a certain day and everything there.
What do you mean in terms of
like
there's a limit?
Smaller Cambios have a limit on them of how much they can.
How much foreign exchange or Jamaican dollars? You can't limit my Jamaican dollars.
Foreign exchange, how much they can take for the day and everything there.
I've thought it through, and you can say so. You remember when the law was changed to prevent people from using more than $1 million Jamaican dollars in cash?
I don't remember but
it's not that long ago. Stop.
Coca 2017.
It's relatively recently. This is before 2017 because I was still at Carreras at the time.
Okay.
And it was a problem for the business community in Jamaica, right? And out of that problem came a solution. And a lot of Cambios, I believe, currently accept a lot of cash from companies in order to solve the security concerns of and the security costs of having maybe those security companies go to. There's a lot of things that do. So a lot of business people do a lot of direct work with Cambios every day because of the cash movement and the restrictions that the government has put in or had put in at the time. Still in. So you see, out of that problem came a solution. And here the fluctuating exchange rate is a problem for some people. Just there are solutions, guys. It might mean for you, I know business people like when you just spell out the solutions. And if I can spell out the whole solutions, I'll leave that for the more qualified people. But it should mean for you, a business person, that let's say over the last 12 months, the average exchange rate has been $132 Jamaican dollars for $1 US. It might mean that for the rest, that a broker or investment bank or a regular commercial bank can say to you, okay, for the next 6 months, I'm guaranteeing you a US dollar rate of 130. It might be high. It might be like 135. But what it will be is 135, no matter what. And that then allows you the chance to, and they're saying, as long as you are giving us more than, let's say, 100,000 US or 10,000, whatever, 10,000 US amount, we can guarantee a rate of XYZ.
Yep.
And how the bank makes money off that is sometimes it's going to be low and they'll make it off the spread. Other times it'll be higher and they might not make as much, but they'll still make. But it is in that fluctuation that the bank earns and you earn. So you might pay a little bit more, but you are able to plan your business ahead. But you see, if you're doing the business just like somebody who's not planning, no strategy involved, no planning involved, you just a dating. Well, I make the money this week, but by tomorrow, if you've always done it that way, then the concept of forward planning is going to be alien to you. And the idea that there is an entire industry set up to help you with this and make money this way might also be alien to you. And then what you'll do is you'll complain and say, yo, government to mash up my business. And the exchange rate to mash up everything. You get a lot of that. The government picks up a lot of blame for a lot of things, but well, I guess that's the government's job. Yeah, that's the government's job really to pick up the blame for a lot of things. Because for some people, you just kind of need somebody to blame. And who you gonna blame? Yourself? yeah. I'm not gonna blame myself for anything.
Those fellas out there with that one.
yeah. I don't blame myself for anything. But yeah, carrying it all the way back to stocks. If I'm bored the hell out of you with that tangent. Jam tea, which was the point. I think I need to tell people something good about jam tea, at this point. I can spell it out. We've spelled it out before, but they're going to the QWI. And I don't understand. Here's something I want to bring up. Jam tea, we know that they have QWI under them, right? And we know that QWI is going to list because they've been very public about the fact that they're going to list. And QWI is an investment company that is a subsidiary that is owned by Jamty. And Jamty is going to list that subsidiary, which means that Jamty is probably going to
sell some shares.
Yeah. What are you going to do?
Sell some shares?
Sell some QWI shares?
Sell some QWI. So it depends on the whole, They might either sell it and just put out the QWI. And I wonder about that. I need to talk to an accountant about how they'll book that gain. So they sell some of the shares, or they book a gain on sale of? Because a subsidiary, they already own it totally. So I'm sure I really feel like they'll book some gain there. But I really just check it out with the accountant and see how that actually works out. But Jamty, QWI will be fully consolidated if it remains as a subsidiary of Jamty.
And what does that mean for the people who aren't financial?
Then where does the financials of QWI, all the financials of QWI will be shown in Jamty's reports.
Okay, so it's still be like a department of Jamty.
Yeah, you won't see it any different. Just gross.
Yeah, I mean they might show it differently. They might be deep in the numbers. They'll break it out. Hopefully, because you don't always have to, right? Some people like to hide it.
Exactly. Imagine you don't want to see. You want to see what the rest of the company is doing separately from QWI.
Yes, that's true. You want to know what each of the arms are doing. Yeah, Jamty is interesting. I can't remember if we laid this out. Right? I don't want to repeat too much, but I mean they have a bunch of arms. We definitely spoke about this. They have a bunch of arms. They have the supermarket, which they don't have anymore, or they have, but they recognize it in a weird way, so they don't count. And they have
the low income housing. They just finished selling all those housing.
Yes,
and they have a rental line in there where they're doing rentals, and that's interesting to me because
that's how we got to this point. You said to look for rentals.
Yeah, man. We saw there was a line in there. It was interesting to me because it grew this year over last year.
But they did say that they put it in two companies. They said that they're going into new properties, and they did mention rental income at some point in the past. Yeah, I think so.
I'm not sure. I think I don't want to say the number. I think it's 25 million.
But the financials are here, so let me look. He said look for rentals. Hold on. Rental income. What does HMS mean? It has rental income.
That's the thing there. Some of them are food. Mahfood and Sons. I don't remember the name.
Mahfood and Sons.
Mahfood and Sons. Yeah, that's a rental company. So they have a company that has a rental property, and they're recording income from that company now.
I think that's under. What did they buy? What's the thing they bought from the government? KIW.
You sure?
I'm not sure, but they had a warehouse. No, they sold the warehouse.
Oh yeah, that's what that warehouse. That's what they finance QWI with that.
So rental income from Mahfood and Sons, which is the real estate arm.
Yeah.
I like how they lay out everything.
Oh yeah, I really like that.
Yeah, I like how they lay out everything. I like how they make their business open. This is a John Jackson company?
Yes, it is.
All right. Yeah. I mean, shout out to John Jackson for sometimes being. It's not for me to say that. For always being open with at least, to his credit, his companies that he's always a part of, financially. Yeah, man, they show their books. Yep, I like that. They don't hide stuff because
like I was saying, they can hide this stuff. They can consolidate the income, so they don't have to break out QWI versus supermarket versus real estate.
Sometimes they really want to know what's going on in a company, and they say nothing in the MD&A.
Yeah, MD&A is the management discussion and analysis. Yeah,
and then you look down in numbers, and you can't see any separation between the business lines, and you say, "Boy, well, we find out when the audit come out."
Yeah, and even when sometimes when the audit come out, nobody knows. Yeah, nobody knows. Funny, some companies do that deliberately. SSLVC, I know that did that when they decided to group their income by industry class.
Oh yeah, what the hell was that?
But I think it's deliberate to hide it. So I know like a VC company might want to hide the income, especially if some of your sub companies are in really competitive industries and you don't want the competitors to know. So I can understand the reason behind doing that.
Makes sense.
I'm playing devil's advocate.
Definitely, it's a listed company, so I want to see everything. Yeah. You decide to be public, so be public. Yeah.
And people should pay attention to that sort of thing because you can see a lot. Blue Power is a great example. Blue Power had all of their books showing the lumber. They break out the lumber in their books.
Oh, yeah.
And then now we know Blue Power said that they're going to list the lumber. Same thing like Jam Tea. Which brings me to the point that... Yeah, it brings me to the point that... I know we mentioned it before in a previous episode, but... it's weird to me how Mayberry, the analysts, I'm not giving them, I keeping up the pressure on them. The analysts, let's look. Let me not guess. I'm looking at their data. Their data currently is current as of Thursday, August 15th. So they haven't updated it for the last day. But a whole heap of things came out on the Friday, so that's cool. But at this point, Thursday, August 15th, they already know about Jam Tea and QWI, because that's public. And they also know about Blue Power and the lumber division being spun off into its own company. Jam Tea's projection from Mayberry's analysts is that they expect it to make a loss in the last quarter that they have left because they have it at a PE of 13.95 times currently. Guys, if you don't know what PE means, go on everymickle.com and there'll be articles there to help you. And they're projecting a 12-month PE, which means there's just one more quarter left of 18 point. Oh, sorry, I have that number wrong. Of 20.2. So they're expecting something to go wrong.
The price to go up or the EPS to go
No,
up?
but it's always at this price.
It's always at the current price.
Yeah.
So they expect the earnings per share to go down.
Which is weird to me, right?
Weird to me.
Well, okay. So do they know something that I don't know?
Yeah, no, they're projecting something and they see that I can't see.
That paired with the directors selling all the time really bothering me.
It's really bothering me.
It's really, really, really bothering me. But, no risk, no reward. And on the flip side...
Sometimes you have to disagree with the market. Well, not market, with the industry.
You can't disagree with the market. The market is always right.
If anything, the market disagree with you.
The market is never wrong. So
yeah. And so you disagree with management, you disagree with the directors, or maybe you just don't know why I'm selling.
Mm-hmm. On the flip side, we have Blue Power.
Blue Power.
And BPO is... Wow. At $8.88, the PE is 36.
That's strong,
That's a heavy PE. And the Mayberry analysts expect it to fall to 34.84 by the end of the financial year.
So that means they have a good vote on lumber then?
Barely, because I would think that lumber stripping would push it. It fell from 36 to 34.
Yeah, so I was thinking of it as Blue Power normal is at $6, and maybe this PE is what at $6, much less.
You can do the math.
About 30%, about 75% of that.
Hold on,
6 to 8.
No man, this calculation I'm doing isn't what you want. You want to know the PE at what price? At $6.
Yeah.
24.
Yeah, so PE is at 24. Junior market average about 20. So they're saying
junior market average is 20
or so.
I haven't checked in a while.
All right,
I don't care.
But
I know we're supposed to care. Yeah, I don't care.
They usually cool. Yeah.
It's still. I mean, you know what? I'm not gonna get flames for saying I don't care. Let me be clear. Let me be clear on what I mean by that. Let me be responsible. I look on a company based on its fundamentals, and I do compare it to market averages or similar industries. So, and I have a range in my mind because I have a range that I know that the industry tends to like. Yeah.
definitely.
So 20 for a junior market company, just like you, I think, okay, they'll accept that. They'll accept 20 on a junior market company. And the truth is, these days, they look like they'll accept 20 on a main market company. too.
Yeah.
20 was too high when it was a junior market
yeah,
4 years
man.
ago. Now, main market companies hit 20 and people are, that's fine. Let's go. It's a main market company, you know. I wonder if things have changed at Lasco now. Over the last few months, as I switched from junior to nothing changed. Other than which side of the side they listed on, but you know,
It's something going, you know?
yeah, if something different is happening there.
Right.
Yeah, but that's what I mean when I say I don't care. But yeah, you're saying it have a PE at 20.
It says a PE at 20 at 6, and it was started there around 6 or something. It was around 6.
Yeah, it was 6 up to Weddy.
Up to Weddy, yeah.
I bought
So
it
they're
at 6
saying
Saturday.
with Lombard doing this thing, it might just be. It's going to be less than the inflated price from the issue of the shares of that day.
Yeah, I how I put it was
Barely less, like $2 off the PE. 36 to 34.
sorry, what you just said?
It was $2
What,
off the PE.
the dividend in specie happened already?
The X date was the date for it. So it was.
Did they speak about it? You know, I know about it. I just know there's an exit, but I
AGM
didn't-
and EGM, and
yeah, but they listed the amount that they're listing in terms of and they said dividend in specie and all that. I don't think I don't think that's public.
They never said dividend. I don't know.
I also don't know, guys.
but
So
they-
they're not, yeah,
The day passed
yeah.
where they mentioned that if you had the company as at that date,
That's
then
the date that they
you'll
would
get
be,
a piece of the company.
and that's called the X
X
date.
date.
Yes, yeah. So that's the
If-
explanation for what that is, guys.
Is that X date or record date?
Oh, no, you're gonna make me look it up. All right, finish what you're saying, and I'll give people the proper things right after.
Yeah. So when I think it was inflated because of that. It went from $4 or $6 to go up to $14 and coming right back down now because the date is gone. So the value in holding the shares, if the value for you was holding for the piece of the company, then the value is now gone. So I bought that. Say I buy it at 14, just so I can get a piece of the company. There's no reason for a lot of people who have my same mindset in buying it to own the company anymore at this high price, or it's not worth it to have it at that price.
So the price usually falls after that.
It falls
Yeah,
afterwards.
yeah.
So they're saying on
So here's something controversial. Wait, you're talking about the X date or record date? Want to clear it up?
whatever it is.
Okay, so not the date that the dividend is paid.
No, man.
Okay.
That's a date where if I have it, then I have rights to whatever it is coming.
Okay.
Yeah. So that day is gone. So it's falling, and they're saying the PE is at today's date is 36, and in the future it's going to be worth 34 at this price. Oh yeah, still bro. Oh fuck.
Yeah, it's weird. It's
So they're saying the value in the company will go up, but not by much.
Yeah, but that's-
It'll still be overvalued
all right, but then think about this.
at 34.
Which junior market company trades at its book value? Because it's currently on the books at book value.
Mm-hmm.
Well, that brings me back to the question of how are they going to recognize?
Oh yeah, man, it's gonna be profit.
No, wait, all right. The initial sale of those shares might be profit. Yes.
Oh, okay, yeah, man.
But then the continued recognition is
It
still
depends on how much they own. Because say like if it's about 50% and then a subsidiary then fully consolidated.
I don't think they're gonna give up. Yeah, they probably
Exactly.
want
So
20%.
the way I don't even think 20. You hold 50 and above junior market.
What do you mean?
Or I think they hold 20% of the company.
No
at
way.
least 50. Like, more than 50% of the company.
I think they're gonna hold 80% of the company.
Same.
Yeah, why would they? They're not giving up more than
So it's a
half.
junior
to-
market,
yeah.
guys. You know how that usually goes. You give away 20% and go.
Yeah, whatever it is, no less than
No less than,
20%, which is the same rule,
Yeah,
which is the root of that
So
same rule.
if
Yeah.
they sell down to 80% holding, then they're consolidating that, just like MJE, and the full numbers are shown within Depot. So, if anything, Lombard makes profit, Depot makes more profit. So,
All right.
so as Lombard's profit increases, then Depot will see the same movement dollar-wise in
yeah,
the profit line.
You know what? They're definitely going to that then because that's unfair. Can't think about this. The operations of the company remain the same. Of course,
Yep.
there's a line in the comprehensive income where it's profit not attributable to owners of the company because they only own 80%, right?
80%, yeah.
But then what it is that consolidate the full results, right?
Uh-huh.
So if you keep it in the books, you get the result you're getting anyway.
Definitely.
All right.
Uh-huh.
Plus, I get the money that you're going to give me for 20% of
Percent
it.
of the company,
So they're
yeah.
definitely going to keep it on the books.
Uh-huh.
So you see, that's the difference. So I'm ready to say that they're definitely going to keep it on the books. And if I'm wrong, I'm wrong.
You're wrong. Yeah.
Yeah.
But I fully thought this. I'm not going to hide it and say it might not happen.
Yeah.
I fully believe this is going to happen.
Yeah,
I'm not to the point where I feel I'm uncertain.
I don't get why was that's so funny. That's so billions of it.
Yeah, I know.
But I'm not sure why we have such a fear of assuming things and saying that it's my assumption. It's perfectly
Yeah,
fine.
fair
I don't
enough.
want to be wrong. Nobody wants to be wrong. It's
Yeah, but
fine.
you don't want to be, but
I want to be right. It's the
the
only
better
way
you own
to
up to
be
your
right.
wrongs, the better you do.
But I don't get it. To clear up that thing that you mentioned before, record date or the ex-dividend date, those two things aren't the same. The record date is the date at which I wrote this in the Observer, so I should know it. But it's a date on which shareholders, you have to be on record as a
Yeah,
shareholder
definitely.
to benefit from a dividend or a payout or whatever.
Next day is a lot that you can sell.
And so the X date is because we have in Jamaica the T
T+2.
plus 2, yeah. So the X date should be like 2 days before.
Yeah.
That I might be wrong on, but at this point I don't care.
Yeah.
You
It's 2
guys,
days
you should
before.
look it up.
Yeah,
Yeah,
the day and 2 more days.
yeah. Or
So
look
it's
on
2 days before.
yeah, look on everymickle.com. What I have there must be right. I must be right. If I put it there, it's fine. I might get it wrong on the podcast, but yeah, this is right. Yeah. Okay, so we're getting a wrap-up sign from Sir Bam of Bam Production Studios. I think we're giving you a nice long rambling one, guys. It's a different style from what we used to. Let me know what you like. I have been Randy, and
I'm Danhai. Finally with a new name, so H Danhai on Twitter.
yeah, I really shake down with the other than that's too long. But yeah, yeah. And this has been, earnings season, another episode. Glad you like it, guys. Keep the feedback coming.